Hi everyone. Sometimes I find I research on stuff and end up in a rabbit hole and I just keep going deeper into it. So I want to tell you this story that I've been following up. And this is about a Nigerian tycoon, very well known, very successful, very rich. And unfortunately, a year ago, around this time, he was on a trip and he traveled with his wife and his son. And unfortunately, they lost their lives. Well, later the media reports had been, everybody, especially in Nigeria and across the world, everybody was so sad. It was such a tragic death. And the stories later came up that the family was in wrangles. And I'm like, how? And I think that's what kept me in this rabbit hole. So apparently the family was in wrangles. At one point they were saying the grandfather was fighting the grandchild, the one remaining grandchild and the adopted children for property. But later I came across about an interview by this tycoon's sister, who's a well-educated Stanford lawyer, all right? And she was giving the version of the story from the family side. And so it seems like there's been now a detachment, and who's to blame? The blame is being put on this tycoon's best friend. One of his best friends, it seems, has come in, and somehow now the family is segregated and they don't even know how inheritance is happening. This tycoon, he and his wife had two biological children. One of the children died with them, and then they'd adopted three children, the youngest being about 2 years old. And it's a close-knit family. This is a man who was taking care of his elderly parents. He made sure they had a stipend. This is a man who made sure that his elderly parents always had an annual health checkup, and he'd send his private jets and they'd fly to wherever to do their medical checkup. Now, to imagine that already it's a loss, that you've lost your son who was taking care of you, and now even the stipend that was coming in has been cut out. You've not seen your grandchildren since the tragedy. The whole family, it's like they've been segregated. And it got me thinking about life insurance and everything that goes with life insurance, and hence our topic today. So hi everyone and welcome. This is Amy of SK Insurance Agency. Our topic today is life insurance. So what is life insurance? Life insurance is basically an agreement between yourself and an insurance company, where for a premium agreed upon for a particular sum assured, insurance takes up the risk of covering you in case of life's tragedies, a premature death, a critical illness, permanent total disability, either of the risks that we carry every day. In a nutshell, that is what life insurance is. But there are two main types of life insurance, and this is one, the most common, term life. And term life basically is life insurance that only covers you for a period, a specified period. The maximum term life you can have is about 30 years. So that's term life. So term life is specific in period. It can be for a year, it can be for 5 years. And then there's whole of life, whole life insurance, which covers you exactly how it sounds, for whole of your life. So most people will be like, so Amy, who chooses to have a term life and who chooses to have whole of life? All this depends on your needs. Most people will take term when maybe the risk they want to cover is perhaps children's education. I have a couple of clients who've preferred to have term life, and their reasoning has been, Amy, I just want to have term life when my children are between now that age of 2 years until they graduate or they have their masters and they've settled into work. So this one client wants to have it for 20 years. I have another client who wants to do it for 30 years. And they figure by the time 30 years lapses, their children will be settled and they'll have no more financial obligation over their children. Okay? So term life is also what you get when you buy assets, like through a bank. Most banks, if you, not most, all banks, if you take up a mortgage and they're financing you, they take life insurance on you. So as you're paying your mortgage, there's a portion that's for life insurance. What does this protect you from? It protects your loved ones from losing the property in case of a premature death. Years ago, in the 80s and the 70s, people lost properties because if the breadwinner died and did not finish paying for the mortgage, the bank would come and repossess the house. I'm sure you've heard of these stories, right? And going back to the story I was telling you about the tycoon and why I mentioned life insurance, and realizing how sometimes a will can, you leave a will, you had life insurance, you left a will. The life insurance policy will not be contested in a court of law. Your will can be contested in a court of law. I'll bring it closer home. Apart from thinking about the Nigerian tycoon, let's think about our late president, Kibaki. The other day I checked and I remember when after he died and his will was out and it was plastered, it was on all the our national dailies. It was on the first, it was the headlines, So Kibaki leaves his everything he owns, he's divided it equally among his children, and he stipulated that it can only be passed on to his bloodline. So I remember why this stood out was so his daughters-in-law, his sons-in-law didn't get to inherit anything, but his children and the children and their children's children could inherit part of his property. But did you know it was contested and they are in court? Out of the woodworks, other children or other persons appeared who are also claiming part of the inheritance as his children. And so this is still in court. Why is it important to have life insurance? One, life insurance comes on to helps you equalize your estate. Okay, you must be thinking, what estate, Amy? This is for the wealthy. Let's talk about the misconceptions of life insurance. One, most people think that life insurance is for the wealthy. No. Life insurance is for you and me and everyone. It's not segregated for the wealthy. Most people also think that life insurance maybe is expensive, but really it's not. It gets expensive if you wait, because the older you get, the higher your premiums become. But if you take it when you're young, your premiums are manageable. What's the other misconception? One of the other misconceptions is in the African setting and the African tradition, people don't really want to talk about the inevitable. The fact that we came into this earth with 2 tickets, came in with you came in and you still have a return ticket. The only thing is we don't know when is our return ticket. Another misconception I've had is a lot of procrastination. Oh my God. If you speak to people in this industry about the few cases that turn tragic, and it becomes tragic for you as a financial advisor or as an insurance agent when you spoke to this person, you tried to convince them to secure their family, to make sure that they had the life insurance, but for whatever reason, they didn't feel the time was right. It was put in the back burner, and then something tragic happens to this person. Especially if they're close to you and you have to go condole with this family, but at the back of your mind, you're just thinking, it's more tragic. I have shared personally about 2. I've experienced this twice in my short stint of being in life insurance, where I've lost clients tragically, and we'd left the life insurance decision on the table. We'd not concluded on it. And it taught me to always make sure I better have a no answer or a definite yes. The maybe, the in between is very hard for me to handle. I think now I have PS, it scares me. I kid you not. The back of my mind, I may not say this to the client, but it does scare me. So some of the misconceptions, we're still on misconceptions. So there's procrastination, there's thinking you have time. Boy, how quickly you can turn from 28 to 47 in a flash, right? And at 47, you'll now be hunting down your financial advisor and saying, hey, we need to finish that business. Okay? And hopefully at that point, you're still fully healthy, but your premiums have gone up. That's a guarantee. Your premiums have gone up. What you'd have been paying then as a fraction, you're really probably going to double or almost triple your premiums. What other misconception is there? So those are some of the misconceptions that are there about life insurance in general. Who buys life insurance? That's a question you must be thinking. Is it for me? Let me ask you a question. Are you a breadwinner? Do you have people who depend on you financially? It could be and don't think about this as only being maybe your wife or your children. If you have a wife who depends on you, or a partner for that matter, if you have children that depend on you, if you have siblings that depend on you, if you have parents that depend on you, if you have a charity you're running that depends on you, if you have a business that depends on you, on your input, on you going out to source for funds for it to run, thus maybe you have employees who then depend on you, you need life insurance. Because life insurance acts as it acts as, apart from it being a way to transfer your wealth and equalize your estate, it can also act as an income protection. It acts as income protection. So that if you left home today and said, hey, see you later, guys, but left and then along the way, your return ticket came very unexpectedly, you want to make sure that the people at home can still live the standard of life that you wanted for them or you always provided for them. Yes, you might have many assets. Yes, you might have money in the bank. Yes, you might have some bonds. But remember, bonds will have to go through probate before your family can cash them out. Your assets will need to go through probate before your family can actually access them. Your bank accounts will have to go through probate before they have to go through court. The succession process has to go through before they can access all these funds. Yet a life insurance policy, whoever your dependents are, that's how those funds would be paid out. Okay? And over just having, we speak about you need to have life insurance. No, you need to go a step further and make sure you're securing it fully for your family. So how do you do that? You go a step further and make sure that you create a trust. And why a trust? Because a trust, again, cannot be contested in a court of law. Your will can be part of the trust. You can have a will that guides how the trust will be run. And if from this tycoon story and what I gathered from it, and you can Google is your friend. Just look for TV360 Nigeria and find the interview with Herbert's sister. His name is Herbert Wigwe. Just follow up on it, or just do your research on what is the best way to ensure that you've secured your estate. Okay? We know or have experienced or have had stories on how if a patriarch, the main patriarch in a family or the matriarch passes away, how everything just blows up and the rightful heirs sometimes don't get what should be rightfully theirs. And one of the ways you can ensure that your family doesn't have to go through that headache, doesn't have to go through a double loss, because it's already a loss that they've lost you physically. But can you imagine that you are probably climbing the pyramid of life, right? And you've you're not on the poor spectrum, you've left lower middle class, you're on the upper middle class, all right? And you've afforded this family this sort of lifestyle. Do you know how quickly they can go down that pyramid and end up back at the bottom? So when you think that, I've educated them, or when I go, doesn't matter, I mean, God is there, they will sort themselves out somewhat. You can't think like that. It's so easy, and you're not getting a chance to come back and rectify the mess that you've left, literally. I don't have another word for it. There's no way, you don't get a second chance to come back and sort it out, right? So you have children who maybe now start getting bounced from one house to another, or by your relatives, yes? So if you had like 3 children and one household is like, we can only take one, your children have been separated. Yet you could have easily been able to take on a life insurance policy, doesn't cost you much, and make sure that you're protecting that income. I get a question of, but Amy, my employer gives me a pretty good life insurance policy. Well, good on you, but you need to know this, and this is a word of caution. When you have employee benefits, right, enjoy them while they last, but remember they have an expiry date. They have a shelf life. You've been invited into this space. Think of it as you've been invited into, I like saying this, you've been invited into a space. Your neighbor is like, hey, you can live in here with us, enjoy all the facilities for as long as we're here for you. But one day you wake up and you're like, no, this is toxic. Like maybe the environment has changed and you want to leave. And you need to remember, as soon as you step out of that environment, you're stepping out to whatever the weather forecast is, all right? You have no protection. All those benefits you had, the life insurance you had at work is no longer availed to you. And sometimes the life insurance being provided is the bare minimum. When I say bare minimum is some companies will only give you WIBA. So WIBA is Work Injury Benefits Act. So they'll cover you in the course of your work, right? And you have an injury or you die, then there's a payment that's coming, and it's usually capped to 8 times your annual salary. That's what will be paid out to you. But if you left work, because it's usually very tricky, and it's not sufficient, I'll explain. Let me give you an example. Your cover covers you from when you're at work from 8 to like 5 p.m. So you left work you went to work, your family knows you left work. I mean, you left for work, you went to work, you left work at that 6 p.m. and maybe you were involved in an accident perhaps, and you've lost your life. And then you go and claim your WIBA. And insurance is like, was this guy at work when he passed away? And no, you weren't. And so the claim is not honored. Those are the few things you need to know about the sort of life insurance you have at work. It might not be sufficient. I'll also take another case in point. For example, what's happening right now? USAID. President Trump has come in and said, hey, his government is no longer going to provide, there's no more taxpayers' money from the US that's going into all the projects that USAID was providing. Now, from where I sit and some of the people I know, there are projects that will stall. There are jobs that are on the line. And with jobs being on the line and jobs being lost, that means all the benefits that these people had are coming to a standstill. And this can happen. I'm just using an example of USAID, but this can happen. It happens every other day. People are laid off from work environments where they had pretty good benefits ongoing, but they stop instantly. And you never know when your boss is going to wake up and decide, I'm closing shop, or we're not doing very well, so we have to let people go. So no, that's why you always need to make sure that you have, because if that happens with work, does that stop the bills in your house? Does that stop the risk that if you are not there, that something is going to happen to your family financially, that there'll be a financial strain? No, it doesn't. So I can't lay emphasis enough about life insurance. I can't lay emphasis enough about ensuring that you go a step further and you're creating a trust so that you've fully secured how you transfer your wealth to your loved ones. I know many people, I've seen people will write children. You'll put your beneficiaries as children. You also need to know that any child who's under the age of 18, the government cannot pay the funds to them. So you'll find your insurance agent or financial advisor saying, hey, listen, we need to put in a guardian. You have to appoint a guardian because this money cannot be paid to children who are underage. But I want you to think thoroughly. And if you ask yourself that question today, sit down, you're a single parent or you're married and you have children and you're thinking, hey, who would I put down as my beneficiaries and who would be the guardian? It's very thought-provoking. I've had the privilege of sitting with numerous families when they have to think this through and then it hits them and they're like, they never had to think about it. Now you're having this whole discussion with your partner and you're like, actually, what would, if anything happened to us, who then steps in to parent our children? Right? So a step further is make sure that when you're creating this trust, it's very important to use reputable institutions. When you're even signing up for life insurance policies, you need to also do your own due diligence. What company are you signing up with? What's their claims history? All right? How sure are you that your policy would be paid out? Those are some of the things you need to do and to look out for when you're buying your life insurance policy. Remember, buy it young. You know, Gen Z, you think this isn't for you? It's for you. Especially for your generation. You need to start thinking about that now. Okay? Think about it now because now you really don't have a lot of responsibilities. Even the millennials, people are settling down a bit later in life. Don't wait for the children to check in. That's when you're thinking, okay, maybe now I can buy life insurance. No. Buy life insurance and then at every new thing that's happening in your life, you're getting married, then remember to sort out your beneficiary. At every new change in your life, a divorce, remember to check your beneficiary and what is it that you need to change around that. Okay? The death of a spouse and they were the main beneficiary, please remember to go change it and add on your children or whoever it is, or so that these funds also don't also go to unclaimed assets. You know why the government is holding 96B in unclaimed assets? Unclaimed assets. People worked, sweat, blood and tears, you gave your all, and then the government benefits after taxing you all these years. So be serious about your money. Know where your money goes. Always get advice from somebody you can trust. Ask questions. Seek to know. Ask for 2-3 illustrations, 2-3 comparisons. Why is company A better than company B? Show me. Let me see. Right? Do your own research. Sleep over it. But do not procrastinate and wait too long. Apart from the traditional life insurance policies, what we know as life insurance, so now this is the term life and the whole of life, other policies that have a life element to them, and they're also considered life insurance, are your pension plan. Okay, because your pension plan if you died prematurely and there's loss of life, there's an element that would be paid out. There's an amount that would be paid out to your loved ones. Then there's the savings / education funds / endowment plans. They also have a little life element to them. When I say little, I mean they pay out a little sum towards loss of life, towards a critical illness, towards permanent total disability. Not all policies. Some policies, it's different. Some what will happen is that if you got into the savings, the endowment plans, the education plans, different companies, different rules. Some companies will pay out an amount upon death. Some require you, if it's year 1, there's only a little percentage that would be paid. Year 2, there's certain percentage. Year 3, some are structured like that. Some, from the beginning, that this is what you're being covered for in case of a natural death. This is what you're getting in case of accidental death. Not you're getting, your family is getting. There's what you're going to get in case of a critical illness, or what you're going to get in case of a permanent total disability. So all these things have a life element to them. Even a critical illness cover has a life element to it, because some critical illness covers can give you a lump sum. So basically this is a critical illness cover. It comes in, you can use it to enhance your medical cover, all right? That if ever you're diagnosed with a critical illness, there's an amount that's paid out to you. However, it has a death benefit, a life benefit to it. That means in case of a premature death, and this payout for the critical illness has never happened, there's an amount that's paid to your family. So these are some of the policies that have a life element to them. Okay? I don't know if this is let me discuss an endowment / education policy, savings plan, vis-a-vis a life insurance policy. So many agents feel a certain type of way about this, and it's about preference and people's understanding for it. So one way to think about the savings or education plans is, and don't feel about it if you already have it. Okay, don't feel bad about it. I have one. I have two. So it's a very disciplined way to save for your child's education. However, what we fail to think about when buying these policies or buying into these policies is the amount I'm choosing to save now going to be enough in 15 years, right? What we don't factor in is inflation and the time difference, because 30,000 today and what 30,000 was like in the 90s, it's two different things. It's the equivalent is, you can feel it, and it's because of inflation. So if you do decide you're going to have an education plan or a savings plan, ensure when you're coming up and you're deciding, hey, my child is now 3 years old, let's think about university, and I want this child to go maybe to Stanford, for example, or you want this child to go to Yale, or you want this child to go to, even let's think local, let's think you want them to do medicine, okay? If you look at the cost now, factor in inflation. And there are charts that show us what inflation is and will likely be around that time. Factor in inflation. So if right now medicine at the University of Nairobi is I'm rounding it off to 700,000 per year, right? For a normal student, this is you've gone in, you're not doing parallel. 700, this is tuition alone right now. What do you think this will be in 15 years? Tuition alone. And when you're calculating it, and why people sometimes feel shortchanged, they will calculate it using this 700,000 right now. without factoring in inflation, without factoring over and above the child having tuition fees, they will need accommodation, they'll need upkeep money, which you didn't calculate for. So when you go to receive your 700 check in 15 years, you feel like it's pocket change and you've been short-changed. Ideally, you aren't. But the policy did not factor in inflation. So you'd need to budget on inflation for this policy. If it's that 700, budget in, would be counting it as a double. So we're counting it as the 1.5 million. That's what we're budgeting per year for this child of yours who you think will go to school to do medicine. Then the reality is that's the premium you need to pay. Yes, there are better ways to do it. You can use the money, the other unit-linked products that you can decide to use because they have higher returns. But that leaves the risk of death. Before life insurance and term insurance came in to this market as it is right now, remember we're coming from a culture of where death is. You're not going to discuss death, okay? So before we had the term and the whole of life, the next best thing was having the education plans and the savings plans and the endowment plans. But now you have other avenues that you can invest your money, but how do you make sure you're securing the risk of you not physically being there, that there's been a premature death, and the need for your child to still go to university is still there? And that's where the life insurance comes into play. So it comes in, you choose to have the life insurance and you choose to have the money market, all right, or to buy the bonds or to invest in stock, whatever it is, whichever other angle you decide to invest your money, where you're packing it for it to grow for school, okay? Also, even when you're doing that, it has to be very structured. Make sure you're doing an illustration, checking on what the interest rate is, and peg it on the lowest rate of return. That if the market did very badly and you could only get the bare minimum that's guaranteed, and maybe that's a 4% or a 5%, that you'd still survive and still hit the goal of saving towards your child's education. But whichever way you choose, it's all on a preference. I feel it's all on a preference level. There are those who can swear by the education plans. There are those who feel like it's a waste of time, mostly because of the little terms and conditions that are there that people don't understand. The one thing you need to remember is that for education plans, you have a lock-in period, 36 months. For most of all the policies in the country right now, 36 months. That means in those 36 months, you cannot default paying your premiums. If you default, you lose the policy. But there are some insurance providers here, insurance companies, that have ways you can secure that so you don't totally lose the policy. But that's a topic for a whole other day. I hope though something. And if you have any questions, please feel free to reach out to us. Our number maybe is at the bottom. Our number is at the bottom. Send us a message. We're here for you anytime. Again, thank you very much. Always a pleasure. See you next time.